Here is the overview of today's gold market news. Gold market performance, trends, and technical outlook. Impact of the Federal Reserve's interest rate policy, Treasury yields, U.S. economic data, and geopolitics. Price movements and technical analysis of other precious metals. Let's have a look at the latest gold market performance, trends, and technical outlook. Gold had tested resistance around $2,665, following a pullback to support at $2,639 near the 20-day moving average. Despite the pullback, gold was on track to close the week at its highest weekly closing price in 3 weeks, signaling strength. Gold also appeared set to close above the 50-week moving average after dipping below it last week, showing positive momentum. The dynamics between the 50-day and 50-week moving averages suggest a strengthening of the gold market, especially if the weekly close remains strong. Gold has pulled back to $2,639, facing pressure from a stronger US dollar, which makes gold less attractive to international buyers. Key resistance levels are at $2,675 and $2,684, while support is at $2,579. A break below support could push prices to $2,525. The weekly chart indicates greater strength than the daily chart, with a reversal of a breakdown earlier in the week. The early week breakdown failed, indicating a potential for gold to accelerate upward, as failed breakdowns often lead to price movements in the opposite direction, which is bullish for gold. Gold's technical outlook shows an upward long-term trend, but a short-term downward momentum. Gold's rise above the previous week's high of $2,639 shows a shift in momentum from sellers to buyers, reflecting a failed breakdown. A close above $2,639 this week would signal additional strength for gold. A rally above the $2,665 resistance level would signal both trend continuation and a breakout, possibly testing higher resistance levels. A decisive rise above $2,665 would trigger a 3-week breakout, placing gold in a position to potentially test resistance at the December monthly high of $2,726. A drop below $2,625 could signal a further decline, with the $2,625 level acting as key support. Additional support is found at the uptrend line, connecting the swing low at $2,582 and the interim low at $2,596. A decline below $2,596 would be a negative signal and a faltering uptrend and increasing downside risks for gold. Next, let's have a look at the impact of the Federal Reserve's interest rate policy, Treasury yields, U.S. economic data, and geopolitics on gold prices. The upcoming non-farm payroll report is expected to be presented on the 10th of January 2025. A weak non-farm payroll report may lead to increased expectations of Federal Reserve rate cuts, reducing Treasury yields and weakening the dollar, thus supporting gold prices. A strong non-farm payroll report would likely limit rate cuts and could push yields and the dollar higher, placing downward pressure on gold. Gold prices are poised for volatility, depending on the non-farm payroll results and bond market movements. If non-farm payroll data disappoints, gold may see an upward movement as yields soften. Strong job growth could push yields higher and keep gold under pressure. The Federal Reserve's monetary policy, particularly its decision on rate cuts, remains a central factor influencing gold prices in the short term. Rising global debt and inflation fears could also slow the Federal Reserve's rate-cutting plans, providing some support for gold. Gold's upside in 2025 could be limited by the Federal Reserve's cautious rate cuts, with only 2 expected after 3 cuts in 2024. Rising Treasury yields and a stronger dollar have posed challenges for gold. The 10-year yield rose from 3.599% to 4.631%, and the US dollar index reached 108.5 for 1. Gold's attractiveness is closely tied to US Treasury yields and the dollar's performance, as these determine the relative cost of holding gold. Despite the dollar's strength, gold benefits from seasonal trends, especially in January, driven by increased jewelry demand and fresh investor positions, which helps offset the negative pressure from the stronger dollar. Political uncertainty, especially related to President-elect Trump's tariffs and economic policies, is expected to drive inflation, benefiting gold as an inflation hedge. Trump's pro-tariff policies have contributed to the strength of the dollar, which pressures gold prices. Geopolitical tensions, including in Eastern Europe and the Middle East, continue to support gold as a safe haven asset and provide long-term support for gold's role as a hedge against economic instability, underpinning gold's strength as a safe haven asset. Moving on, here are the latest price movements and technical analysis of other precious metals. Industrial demand is expected to support silver and platinum, particularly with the growing demand for renewable energy and automotive applications. Silver is trading at $29.58, facing critical resistance at $31.40 and $31.70. A breakout above these levels could lead to a significant upward move. Support levels for silver are at $28.75, $27.71, and $27.51, with a slightly bearish outlook indicated by a relative strength index of 43.57. Silver's long-term growth is supported by industrial demand, particularly in renewable energy and electro needs, which could drive future price increases despite short-term resistance and dollar strength. Platinum has rebounded by 1.96%, reaching $938, but faces resistance at $945, with the 50-day simple moving average at $952 being a critical barrier. A rise above $945 could push platinum toward $952 and higher, while failure to break resistance could lead to a pullback toward $900. Platinum's long-term prospects are supported by industrial demand, particularly in the automotive sector for the manufacture of catalytic converters and in the emerging hydrogen energy technologies.